Look at this, guys. Short sellers see distress emerging in apartments as borrowing costs surge. And here's the thing about being distressed. Essentially means that you haven't been paying your bills, you haven't been paying back the bank for months, and now your property is on the verge of foreclosure or is already foreclosed. We're seeing this sort of situation happening in many big American cities. People going all out. They are leveraged all the way up, and they're putting it all into multifamily buildings. Even Grant Cardone is now facing like a $500 million foreclosure because the dude bought so many apartment complexes. He just can't even sell these, even if he needs the capital to survive, because there's not really that many buyers. There's a lot of sellers for big commercial properties, big office properties, big apartment buildings, but there's not enough buyers, guys. Rates are still pretty high. Not to mention the amount of construction that's happening in many of America's biggest cities is through the roof. If you look at some of the home types, and let's just look at the Dallas and Fort Worth area, you clearly see that multifamily buildings are scattered and littered everywhere. Small multifamily buildings, and there's also bigger and more luxurious ones. At the end of the day, there's just not that many buyers on the market for these units. And many of these homes are now becoming empty, they're being foreclosed, and we're already seeing some of the biggest investors throwing in the towel. You got guys like Blackstone Mortgage Trust, who's facing a massive short position because everyone thinks that their portfolio of multifamily buildings and commercial properties are pretty much going downhill, which they are. In fact, there's already predictions of big dividend cuts from these REITs in the upcoming few quarters. And look at this. So much construction is destroying the value of multifamily properties. Remember, guys, the whole point of buying these big apartments is to rent them out and make rental money. That is the whole point of them. Rich people are not going to buy these multifamily units and live in them. They're supposed to rent them out. And construction has hit such a massive increase that a lot of these apartments are now worthless. Oh, you are renting your Oakland apartment for $3,000 a month? Let me introduce myself and build even more. And now everyone's doing like $2,000, $2,200 per month. This is exactly what's happening to the Brooklyn Basin. One of the biggest construction areas in Oakland. Construction on the next phase of Brooklyn Basin wouldn't start anytime soon. Developers said so many people were building apartments in this location that they had to pretty much tell everyone and even themselves to just stop building because it's literally dragging down the rent. The rent crashed about 10 to 20%. In just the past 12 months. That just shows you how bad it is. And look at this. You also have multifamily apartment skyscrapers that are now dealing with some big foreclosures. Their valuations have also dropped. Here's the thing about American real estate that's really weird. If you go to like the big suburban areas, and also with like lower populations, typically housing prices are somewhat stable. But when you go to like really big metropolitan cities like Los Angeles, for example, on Zillow, you kind of see not a lot of people are buying, right? These mega cities and their downtowns, a lot of these units are empty. But then you go to like the smaller California cities, a lot of housing prices are actually trending upwards. But the big California cities like LA, San Diego, San Francisco are all dropping like rocks recently. And NEMA, which is one of San Francisco's best multifamily buildings, having your valuation cut by 50% is pretty bad. And they are also on the verge of foreclosure. And WeWork is also pulling a fast one as well by saying, yep, we're also foreclosing. WeWork seeks to reject even more leases as bankruptcy proceedings trudge on. They're saying goodbye to 8 more leases as bankruptcy goes forward. And this is pretty bad because WeWork doesn't have any more money left and they severely over-leverage themselves. So many investors in 2023, 2022, and 2021 borrowed so much money because interest rates in the beginning were so low, and they went all in, threw all their chips into real estate. And now with over construction, interest rates are high, people are kind of broke, high paying jobs are hard to find. They kind of got to sell these units, and what's worse is nobody really wants these units at all. And the situation is getting kind of dire. You got whole entire office complexes in Silicon Valley defaulting on tens and 100 millions of dollars of loans. And short sellers, they're really licking their lips right now. Muddy waters is shorting the real estate market. You got some of the biggest whales out there doing individual shorts. And rich people who haven't even said anything are quietly going in and shorting the real estate markets. Distress is happening. Guys, apartments valued at $67.1 billion are potentially distressed. They hope to profit from bets against multifamily, which is by far one of the biggest downgrades of real estate. Look at pretty famous gurus out there like Grant Cardone, for example. You got people saying he might even default on $1 billion of loans. And that's not just him, guys. We already got little stories here and there, little snippets of like big multifamily properties in Texas just simply defaulting. It's not looking great at all.